the beauty of all this ordinary income. So let's say an example. Here's the disk structure. What a disk is, the IC disk, it is a separate legal entity. It files its own tax return, known as an 1120 IC disk. So the question is, why do we have to set up this separate legal entity to take advantage of the IC disk? I'm going to get a little historical, a little tax nerdy here. In 1971, when this was enacted, remember, we didn't have the sophistication of ERP systems or very sophisticated accounting systems. Things were much different back then. So Congress said, well, let's have a separate entity to make it easier to track and examine these entities. Moreover, back in the old days, let's say the old days, 1971, the IC disk could work two ways. Now, one way it would work is the IC disk would actually purchase products from the exporting company, take title to them, and sell them overseas. I've been practicing for about 26 years. I've never seen that structure. It's far too complicated. And there are a couple out there, we don't deal with them, but for the most part, how this works, we set up the separate legal entity, and then we calculate this magic number called the commission. So what happens is, remember I spoke earlier, the benefit you receive from your disk is reclassing ordinary income to qualified dividend income. And the question is, well, how much of that can we reclass? That number, the amount that we reclass, is the commission. That's a very, very lengthy, in-depth calculation. I can have this conversation offline with you if you guys have 3 or 4 hours to kill. But for sake of discussion today in a short amount of time, I'm going to keep this very, very simple. What happens is, say here's your exporting company. You're exporting coffee cups, as I'm holding in my hand here. And we export $10 million of coffee mugs to Canada. We do our calculation, and we say, okay, the commission, or the amount of income that we can reclass from ordinary income taxed to at 37%, we can reclass $1 million of income, which is the commission. So in essence, the exporting company, your coffee mug company, pays $1 million to the IC disk. That $1 million is then immediately paid right back to the exporting company. So you say to yourself, well, did income really change? Overall, for financial statement purposes, not at all. However, for tax purposes, you see $1 million less of ordinary income and $1 million more of qualified dividend income. So those of you that are S Corps or LLCs, when you get your Schedule K1 from your CPA, you're going to see $1 million in the less in the ordinary income box and $1 million more in the qualified dividend box. So the spread in those rates, and those rates will be different for each individual, is where your benefit is. So it could be 6, 10, 12, 13%. So that adds up very quickly. That's how the IC disk works. It's how you get the savings. Now, some things to remember. The IC disk is a separate legal entity. It is a simple C corporation incorporated within any state in the United States or the District of Columbia. It can only have one class of common stock. It has to have at least $2,500 of capitalization. It's just a very simple entity to set up. But it does have to be a walking, talking, living, breathing corporation. It has to have a checking account where you deposit $2,500. The benefits of the IC disk start when you incorporate it. So example, say you're in New York State, you incorporate in New York State. The day the Secretary of State of New York stamps the articles of incorporation saying you're effective, your disk is effective. You can't go back in the past to reclaim the benefit. It's only on a go-forward basis. It's unlike benefits such as R&D credit or the work opportunity tax credit. The disk is only on a go-forward basis. So you have to remember, timing of the essence with the IC disk. You can incorporate it on January 1. You can incorporate it on December 28th, any point during the year. It's only on a go-forward basis. Once the disk is incorporated, you request an EIN from the IRS, and then you file an election with the IRS to let the IRS know you want to be considered an IC disk. You have 90 calendar days to do all that. You don't want to be late. It's a $10,000 fee to beg for forgiveness from the IRS if you file that election late. Once it's incorporated, you can take advantage of the disk benefits. And then you have 90 days thereafter to file the elections and other compliance. Once the disc is incorporated, it's very non-invasive to your operations. Well, a big question I get, well, do I have to change my invoicing to my foreign clients? Not at all. Nobody knows you have an IC disc other than the IRS, your CPAs, your accounting staff, and you. That is it. The beauty of it is nothing changes over here. It's just simply it's facilitating this reclass of income. And again, the reason we still have the IC disc is because the statute was written that way in 1971. And it really hasn't changed much since then. There are some nuances, but we're not going to bore you with that today.